Well, as silver's collapsing and the oil's collapsing, so is Russia. Russia's collapsing. And they got several reasons for that. Actually, some of the obvious reasons is that oil is 50% of their money. That's where they get their foreign money from, oil, right? Oil sales. Now, the oil prices are getting down to, 76 or whatever. JP Morgan, actually, there's a big spread between 50-something and 100, but most of them are around the 80s. But like Goldman says, the average oil price where they break even for crude oil in U.S. for shale oil manufacturers is 75. JP Morgan says it's 76, 77, right around average, right? That's not everybody's exactly the same. Now, what's being blamed on this, why it's coming down, is Saudi's got one price going to the U.S., another price going to Europe and China. But I also think there's another game going on, is to also build up resentment to Saudi, for one. Because I think eventually what they're going to do is they're driving out the smaller oil producers, the smaller mines, the bigger guys are going to buy them up, and when it's in their interest, they're going to drive the prices way up. And the way they're going to do that is through a war in the Middle East. It's already set where they have a global confrontation is going to start over there. Now, the problem with Russia, though, as the oil prices go down, capital is flowing out. It's going goodbye. And, that's, I don't like this deal with the oil because I got leverage on it. But I'm patient. Actually, I think eventually it's going to hit to record highs, and I'll dump it then, and, it's a matter of being patient. Silver, I don't give a damn about. Palladium, actually, I'm on the plus side with that big time. In the metals, I'm not worried about in the least. But oil, I'm striking the back with HHO. We're going to be doing some tests here pretty soon on a vehicle, maybe today. And the other thing is, there's other things that are coming up that are actually affecting the overall GDP of, even the USA too, because we got an aging population and there's a lot less productivity for that. Actually, Harry Dent, I think it's Dent, talks about this when they had the baby boomers go up to a certain age group when they're produced the most, that's when the economy was booming, and when the baby boomers are the big population slice, they start aging and retiring. They bring, the productivity goes down in the nation. But they're having this problem in Europe, too. They're having this problem in Europe, and guess where they're having this problem big time? Russia. Russia's population is aging like crazy. That's why the economies are slowing down, too. They're not slowing down with me, because I take B12, man. I take mega doses of vitamins, man. I got energy up to yin-yang, man. I go like an Energizer bunny all freaking day, 7 days a week. So it don't matter with me, man. And I'm going to probably be living like freaking Noah for all I know. But the other problem is even in China. China's got an aging population. They freaking lifted their part of their ban on a one-child policy. They used to have it where if you were an only child, you can get you could have more than one child. If you were the only child and you were the parent, you could have more than one child. Well, now they lifted some of these bans, and they expected to see a lot more babies being born in China, and lo and behold, it ain't happening, man. Also, Japan, aging demographics. See, this is what's the problem is it's going on in the whole world. Actually, that's affecting the GDP, too. Aging demographics. Everybody wants to have a whole pile of silver and retire. Me, I don't want to ever retire, man. Period. Ever. But, as far as like making money on the silver, yeah, I want to do that. But that's not going to be a problem. I feel that it's totally in the bag. No problem. It's going to happen. I'm 100% confident of it. I also do know that when it does go up, I'm not going to be afraid to sell. And actually, that's when a lot of people in the middle class are going to get ripped off. If they buy it now, they feel like they got ripped off. But actually, when they're going to get ripped off is later on when it's really high. Silver always does this. And you know what I say it's going to do? Spike. Spike is an adjective, which means it goes way above what it should be go up to, and then it'll crash really fast. But this time in the USA, They cannot raise interest rates like they did back in the Paul Volcker time. If we have a late 70s super spike in the metals later on, what will happen is they can't raise interest rates because they're having a major problem. They're also doing that, the twist, whatever the hell it was, the twist or the swap or whatever, swapping the long-term debt for the short-term debt to lower the interest rates because that's trying to save them money. If they raise interest rates today, the freaking goodbye government. They won't have enough money. They'll just be paying interest. That's all they'll be doing. What do they got? 17 trillion plus now in debt on the government? Forget about it. That's why once the metals go up this time, they're going up. They're going up and they're staying up there. But they'll probably spike way above where they should go to and settle down at some height. And what's going on right now is we got the old rigmarole stuff going on right now with the spot market. A lot of people, some people are asking me about questions about, well, what's the real price of silver cost production? Varies by mine. But the thing is, where you can see it's blatantly obvious where they're losing money is, why are the silver equities going down? That's because they don't have a good P&Ls, so, profit and loss statements, income statements, so the investors don't want to move in there and say, here's money, because I know I can get a return on money, because you guys ain't making no money on the silver mines. Also, I forgot what the one in Canada was, but it was one of the largest gold producers. They did an abandoned project. In other words, they did a major capital venture that they wrote off as an abandoned project. Abandoned project, you have, to be termed an abandoned project, the project has to be abandoned for at least 6 months. And it's a long-term decision. Because what's going to happen is they're going to have to repay all those loans they expected they would get returns on for selling gold or whatever from the mines. And the other thing is, if they have to start it back up again, it's going to cost them a hell of a lot more money. So it's a very, very cautious decision to abandon a project. But the reasons that I forgot which one it was in Canada, but it was also Barrick Gold abandoned a project in the Andes Mountains down in Peru, one of the largest ones going. They got, I think it was $1.5 billion tax write-off because all that stuff goes on the books. When they are starting a new project, a major project, it's all capitalized. They're not expenses, they're capital costs. They go on the books as capital costs, as an asset. They don't go get allocated to the expense on a P&L until we actually show some revenue for sale of item coming out of that mine. But when they abandon a project, they can write the whole thing off. Everything's expensed, and they got major tax breaks. So part of the reason they did that was because they're hurting for cash. But you know what that means when they abandon projects? I mean, yeah, the stuff is all here on the earth, but you know what? You don't freaking start a freaking mine like you freaking open up some hairdressing salon, like here's some freaking, here's some brushes and clippers and stuff like that, and you go to town. Opening up a mine takes a hell of a lot of stuff going on. You got impact studies, you got environmental studies, you got EPA studies, you got all the infrastructure, loans. Like you got to set up interest reserves on the loans because of the cash flow problems. In other words, you're paying the interest on a loan by adding to the loan. That's actually how they do it. They set up an interest reserve on a loan. Like they might say they have a loan for so many millions of dollars and have a $500,000 interest reserve account, and the interest is actually paid out of an interest reserve. And then once that gets exhausted, if things don't go fast enough, that interest reserve, they'll have to refinance, and usually what happens then, they get fucked, So that's what's happening with the mines. And when they get fucked, you know what happens? Somebody comes in there and buys them. The banks own it, and they just auction them off to somebody, They'll sell them off to somebody. So the game is, they're actually putting some of the miners out. So, Goldman Sachs is probably looking at these miners left and right. There's always going to be a price where it's going to be a value. There's always going to be a price where it's a value. And if they go upside down due to the freaking long-term debt they have, and you know what? A lot of these mines are, there's bonds, there's high-interest bonds that they're attached to, too. They're paying high interest on the money they got going several years ago when things were hot and heavy and they thought they were going to go up. A lot of them are locked into real high interest bonds. And you know what's going to happen then? they're going to go under. They're going to go under, and you know who's going to be picking them up? J.P. Morgan, Goldman Sachs. What the hell do you think these investment houses do? There's always going to be a price they're going to buy them at, and once they own this stuff, it's going to be in their interest to drive the prices up. Now, I'm going to give you an example. What happened with the Gulf oil spill? You know, what was that dime they dropped? The guy dropped that dime on an email to his girlfriend. You know, it says one oil spill in the Gulf, and we'll make tons of money. It was a Goldman employee, and the chick, she freaking told everybody about it. Well, they had the oil spill, and Goldman Sachs bet right. The CEO of BP bet right. They also had private placement platform closed to the public on trading to short the oil companies, and they all bet right, which was closed to the public, special shorts. So I'm going to tell you this right now. These guys know stuff in advance because you know what? All you got to do is knock over a domino or a bowling pin, and the other one's freaking go. And the key is going to be the Middle East. It's already being set up. We got ISIS. We got sold them a lot of arms over in the Middle East. It's not going to happen right away, but this market drop in the silver and the metals is preceding what's going to happen in the markets. The markets will roll over. It only takes a day or 2 days for the whole damn thing to collapse. And when it collapses, Yellen's going to be on there as full steam ahead with QE. But that's not going to be an immediate freaking push up in the metals. What's going to really push them up is conflict in the Middle East. And I think they got that all planned. They'll blame it on Saudi, man. I don't know what they're going to do. But they're never going to blame it on themselves. Somebody else started it. I know it. And you know what that means? Oil goes way up. They're going to own all the oil companies here because they're going to go bust. You're going to take them over cheap. Well, not all of them, but some of them. And the smaller guys are going to own them. And when the stuff goes up, it's going to, it's going to be their interest to drive the damn stuff up, and it's going to go way the hell up. So, but anyway, part of the problem that's actually in the GDP and the slowdown across the world, I just want to emphasize this, is that there's an aging demographics, not only in the United States, Europe, and even China and Japan. It's even Russia. Russia's getting clobbered too. That's also part of why there's a slowdown. Now, there's not going to be aging demographics with me personally because I take B12 vitamin, you know. This stuff, man, this stuff makes you strong, man. I take a lot of vitamins. So anyway, just want to give you a quick update on this deal because don't go selling out now. Don't go selling out. That's what they want you to do. And they say, oh, it's going to be a terrible investment for the next 10 years. No, it ain't. No, it ain't. It's when it goes up. It's going to go up fast. It's going to actually, when it goes up too fast, that's when everybody in the world is going to be convinced that it's going to go up to the freaking moon. And that's when it's dangerous. And when I tell people it's dangerous, they're going to get mad at me when I'm saying it's dangerous if it was high. If silver right now was $75 or $70, I'd be saying, holy shit, that's dangerous. And people would be getting mad at me. I'm telling you right now, it's not dangerous now. It may go lower, but it's not dangerous. You don't invest playing day trader. It's going to freaking move up, and I think the plan is it will be moved up when it's in the interest of the big boys to move it up. And they got a plan, man. They got a plan. It's not the fundamentals. It's going to be conflict. Conflict is going to make it drive it up. And that's what always happens. If you look back historically, when did oil go up? Tensions in the Middle East. When the oil goes up, what happens then? Gold goes up. And that is typically when the silver goes up. But this time, they're not going to be able to raise interest rates to bring it back down. The dollar is actually going to be devalued. But the dollar is not going to be worthless because the dollar is going to be the currency of the United States of America. The United States of America is they're trying to push it down. But I'm going to tell you this right now. The way to push it back is to go blue collar, hardcore all the way. And work like you're on steroids, but don't be on steroids. Take some B12. Anyway, over now.